And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family, and happy Capital Preservation Friday, May the 19th. As always, we are always focusing on accurate context, good risk management, and remaining patient in our trading here on the Market Prep. My name is John Hoagland. Thanks for trusting me with your time. What an interesting day yesterday, huh? Going to be another interesting trading day today, it seems. No economic news due out today, but we do have a series of talking Feds, and I understand there is a warm-up band for Powell. Well, maybe Powell is going to be the warm-up band, one or the other, but 7:45 this morning in Central Time, Williams speaks, 8, Bowman speaks, and 10 o'clock, Chairman Powell will be speaking, and I guess they're going to have a special guest speaker there as well in the form of Ben Bernanke. So we'll have the current and a former Fed chairman in the room at the same time. That's going to be, just don't cross the streams, guys, please. Don't cross the streams. If they were Ghostbusters, that would be a problem. So anyways, stocks are holding steady here this morning. That rally yesterday, obviously fueled by investor optimism that the trade ceiling deal will be reached. There are lots of barriers that still remain, mostly in the form of trying to cut some spending. But from what I'm hearing, both chambers of Congress have been put on alert and told to be ready to vote on a day's notice. Crude prices rise to a key level this morning here. On debt ceiling talks and anticipation of the government planning to replenish and this is hard for me to say, the Strategic Petroleum Reserve. It's always hard to say. As far as earnings this morning, Deere and Company came out beating expectations on both categories. Foot Locker not doing so well, missing on earnings per share as well as revenues. VIX this morning down slightly at 1688 this time yesterday. The dollar index 103.18, still holding up above that 103 level. A little bit lower, a little bit higher, about the same as it was yesterday at this time. And the yield on the 10-year up to 3.67%, was 3.61% yesterday at this time. As always at this time, I ask you to hit the lucky like button, share, comment, question, feedback, heckling, and subscribing to our YouTube channel. Oh, and love are always welcome. And subscribe to our YouTube channel. You get notifications when we do go live. I want to thank everybody for participating in Make Hoag Money this week and participating in group coaching, and wondering if any of you attended the coaching office hours yesterday. That's going to be a new regular for us here. Eddie and Bob and Jack were there yesterday for an hour and a half talking and answering questions, and thought it went very well. It was a good thing. And so hopefully you enjoyed it. All right, finally I get a heckler. Matthew, I see you. You're booing. And hey, I got to be able to take it. You've been a futures trader for a few years. Got to have thick skin, huh? So we're thinking about capital preservation on a Friday. I say this pretty much every Friday, but back in the day in the pit, if you were still in the pit after noon on Friday, you were down money or you were chasing money. So my suggestion always on a Friday is make some dough, put it in your pocket, preserve the capital that hopefully you've accumulated through the week, and put yourself in a nice position to have a good weekend. So, futures trading today is the first one in the room this morning. You win the prize, futures trading today. Rooster Pete, futures trading today, asking Rooster if he's getting any sleep with the new chick. I've been meaning to ask Rooster how things are going. It's always fun having a new little one, right? Will R, good to see you. Haggle Matters, Dan Trader. Good. Lacey says good morning to everybody as well. Shaw, good morning. Will, Dan Trader putting out the talking feds that we're going to be hearing from today. Will is praying that the feds to stop talking, right? Timothy Marks, Dan says, looking at the audience at the conference, I think they're feeling the same way. It's not like a rock concert or something like that. It's a whole lot of talking of economics and all that stuff. Bill, good morning. Chad, Kevin, good to see you this morning. DA, Henry, Bear goes long. Yes, get in, get out, enjoy life for sure. Sarah Hall, good morning. Prayers and love to you as always. Nice win on the OR trade yesterday, Ground Zero. Glad to hear it. Always love hearing about your successes here on the Market Prep and anything we do. John, good morning. Robert, good morning. George, the center of the universe, is right on the floor here where the center of the universe is taking an early nap this morning. Rusty Golfer, good morning. Shy Shaw, anyone know where? I don't know offhand where it's going to be live streamed. It sounds like Dan Trader is watching it right now, so maybe Dan Trader can pop in where he's watching that. Anthony, good morning. Nastic, Andy, Bleed, Jason, Thunderdome for Fed shares, right? 2 men enter, 1 man leaves. That is good. James, good morning. Haggle Matters. Anthony, well, George Duque. Joe, peace of mind. Good morning, Joe. Always peace of mind. There's my heckler there this morning, Matthew. 8 Ball, how to preserve capital on a Friday. Well, you just follow your process. If you have a personal daily loss limit, that's a good place to start. Hopefully you'll get nowhere near it. Hopefully you'll ratchet up throughout the day and have some good trades and then take them with you. 8 Ball, Dennis, Rusty, looking forward to coaching with Robert later on today. Excellent, Rusty Golfer. Let us know how it goes. What is behind my right shoulder? This is my certified funded trader certificate. I am a certified funded trader at Top Step. I got one of my old badges kind of stuck on there as well. Austin, good morning. Olaf, 8 Ball, Jason, good morning. And Jason Cargill, good morning. Buenos dias. Somebody said in here, happy Don Julio Friday. Well, maybe later on, but we got a little business to take care of before then. Yeah, there's lots of kind of cool stuff on my bookcases behind me here. I am not the sailor in the picture behind me. That is my dad, who was a Board of Trade member for 40 some odd years. And so that is him when he was in the Navy, and that's his flag from when we laid him to rest. He's a great man, and I try and bring all of the wisdoms and things that he taught me to all of you sometimes. I have a dad wisdom pretty much at the end of every group coaching session, where I go back and think about some of the things that he said. And a lot of them I thought he coined, but I find a lot of them are, he borrowed them from others to teach them to me. So we're going to get into the charts here. We'll take a look. I'm still kind of No. That is, under the books. My right shoulder. Oh, that's a dolphin. Here. That's a dolphin. It's a crystal dolphin. I've had a thing for dolphins. Yep. Yeah, I've got a couple more up there that you can't see, but as soon as I get a few more things that I'm gonna be, my office is almost done. It's been a while, but there's a lot of stuff that I've got to put on the walls. I'm gonna do a virtual tour of my office where I trade and where I contemplate and where I look for context and where I always think about risk management. Because I've got a lot of, I don't know, some cool artwork from years past in trading, and I've got newspaper articles and pictures that were of me in the news, and pictures of the floor and the Board of Trade building and all kinds of kind of cool stuff here. I'm going to do a virtual tour when it's all done, and a little corner devoted to art, because you got to be creative, right? Got to be creative. All right. And it's a light. Well, there's a little light behind it. 8-ball. What's your favorite year trading in the last decade? Probably last year. And this year's shaping up pretty good too. Because I was on the trading floor and traded in the pits for so long, it was I think it was a hindrance really to become consistent and profitable on screen. There were things that I got used to, seeing on the trading floor that I wasn't going to be able to see anymore. So, when I stepped out of the pit, I spent a year basically trading on sim, just trying to figure out how I was going to put accurate context into the marketplace. And it was a full year before I started taking live trades, and each year since then, I've done a little bit better and a little bit better and a little bit better. So I have to say that my favorite year in trading is today. Because that's all the past. We know that there's nothing in our past that's going to guarantee success in the future. It says right on the CFTC disclaimer, no past results are indicative of future results. So it's always something new. When you get the right answer, the markets are going to change the questions. You got to embrace that change, remain creative and flexible enough to see what's happening as it's happening. And I'm not saying that it's easy. There's always something new. There's always something changing. And, I talk sometimes maybe too much about the fact that I think there would be a lot more successful traders. We know that it's a zero-sum game. For every dollar made, there's a dollar lost. There's no value creation in futures. But I think that if newer traders, even traders that have really good knowledge about markets, had better knowledge about themselves, change is difficult. It's scary because when things change, we don't know the outcome. And if we are afraid of change in the form of a positive change or becoming successful at something, and some of those fears can be, well, what if I'm successful for a year and then I fail? Will I be able to take that? Will you be able to maintain certain relationships that you have, if you become more successful, are people going to view you the same? This was a big thing for me because I saw a lot of people come down to the floor and make a bunch of money, and then they seemed to get weird because they started feeling like everybody wanted something from them. And the ones that were able to embrace that change and remain humble and happy people, they've got a great thing going, and that's what we're hoping for all of you. So don't be afraid of the change of success. That's one of the things that I think is one of the biggest barriers to success, is the fear of the change that it's going to bring. People fear change. Futures is all about change. Prices change, markets changed, strategies change, market stage change, markets change people change markets. It's all about change. And when you can really truly embrace that change in all aspects, then you're opening yourself up to being more, I think, accepting of the things that you're going to be able to do as a trader. Think about the positive change you can bring to somebody else if you become consistent, profitable, successful to any degree in this. You can help the next one up. You can teach a friend about trading, and maybe they can become successful. Or you can teach some other people about investing or trading. I've been trading for years, and I don't still feel like I'm smart enough to be talking about investment strategies with people. But as far as day trading is concerned, I think we put a pretty good contextual layer over these markets on a day-to-day basis. We're not always right, we're not always wrong, but it's in being able to recognize context, being able to hypothesize to that context, seeing that hypothesis become true, and then trading to that hypothesis until it proves wrong, and do that day in, day out. And no matter what thing happens, no matter what changes, I can flat out tell you, I can tell you that highly volatile periods of time, I don't even touch the mouse. I don't touch the mouse. Because I've had wildly successful and wildly painful days when volatility is around. But I know over time that when the markets are, in air quotes, I hate this, normal, that I'm going to be able to win over time. And that's the thing. A lot of folks think you're going to get into trading, you're going to make a shitload of money, and that's going to be it. And you're going to have a rock star life. To me, it's never been a get rich quick. It's a get rich slow, because I don't want to take big risks. So I don't necessarily get the big rewards, but I get the rewards in a daily, every other day, whatever those rewards are, they pile up and pile up and pile up and pile up. So that's just who I am. There are people who are always saying you've got to push past your barriers. You've got to push, you got to push yourself to trade more or trade bigger or make more money or whatever it is. That's never worked for me. And one of my dad's wisdoms was, you can make a lot of money trading one or two contracts. If that's who you are, embrace it and make the money. You embrace it, you make some money. So he knew, and I've known a lot of traders who've made a lot of money trading 1 to 5 contracts. That's 1 to 5 contracts. You're not going to make $165 million in one summer doing that, but you can provide yourself a very good life. And can you imagine having the number of contracts in soybeans, corn, wheat, and oats that would create that kind of wealth in one summer? Can you imagine the pressure of having that many contracts, holding on to them and holding on to them for weeks. It just, I'm not that strong. I'm not that strong. And I know it. Hey, Casey. All right. Enough pontificating. It's after 8 o'clock. Crude oil is already open. Equities are going to be opening in 25 minutes. And I have a tendency to talk too much. But my wife probably wouldn't say that. She says, you never talk to me. I love her to death. Okay, here's the S&Ps. So yesterday, we all know that we had a pretty decent breakout from balance yesterday. We drew in more volume. New York Stock Exchange was about the same. It was about 4 billion shares traded. So it wasn't a big event as far as volume is concerned. But we did add 36,000 in open interest. So this breakout, at least for the day before and yesterday, with the amount of open interest that increased, what does it look like here? It's 91,000 contract increase in 2 days in a directional market. That's new business, ladies and gentlemen, coming in to move the market higher. That new business has given the auction to the upside for now an A grade. Open interest and volume continues to increase. There's many new longs. A lot of money sitting on the sidelines came in yesterday, and there's plenty more out there. But this whole rally has been in anticipation of good news. What do they say? Buy the rumor, sell the news. It's what makes me feel, even though this rally is healthy and I've given it an A grade, that this rally is somewhat fragile. If somebody says the wrong thing or something goes wrong, there is going to be a drastic change in the current market state. So make sure you are, of course, protecting yourself with stops, but trade what you see. We can't anticipate somebody saying something or something changing on the fly the way it sometimes happens. So trade what you see, and I'm seeing a healthy upside market right now. So until there is a change in that, I think we're going to be looking for opportunities to buy weakness. Take a look at the 30-minute chart. Adding open interest, hanging. Adding open interest, hanging. What else did we do yesterday? Well, we're going to be opening with a gap with relative probability. We also had a late spike. So if we open above the late spike, I'm gonna go through the rules on the TPO chart. Right now, overnight inventory, maybe a little bit long, opening with a gap. So there's gap rules that we're looking at as a nuance for the trading day today. If we open with a gap and can't close the gap, or close the gap and leave a low there, that can be supportive and accepting of higher pricing. Now look at the TPO chart. What did we do yesterday? It's a normal variation day. The initial balance is the lower extreme of the regular trading hour session. We looked above weekly kickoff high, which was 41.94. We came all the way back to low of value, and later on in the day, we put up a late spike. The late spike is when price leaves balance right at the end of the day and doesn't have time to show acceptance through time. Okay, so the market is currently telling us that it is accepting higher pricing here before the open. Opening above the late spike is the highest probability of acceptance of higher pricing. Opening in the late spike is a secondary, but still higher probability of acceptance of lower pricing. Opening below the base of the late spike, which again is 41.9950, would show excess at the high and possible rejection of higher pricing. All right, what does that mean? Well, we're opening with a gap. A gap close, might be supportive. This market can come all the way back down to the base of the late spike and still be viewed as accepting of higher pricing. Value will be higher if that happens early in the session. Opening range trades might be beneficial for us because the market is opening out of balance. It is currently out of balance for the last 1.5 days. So the market is enjoying a successful upside auction. It's been given an A grade. As long as volume and open interest continue on a daily basis to come into this market, there's no telling how far that this rally can go. There's a lot of talking. There's a lot of people talking heads about the bear market is over, a new bull market has come in, blah, 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 blah. Most economists don't know what they're even thinking or talking about. Because nobody can predict anything. I mean, anything can happen. ACH, we say that all the time. But for today, I'm going to be looking for opportunities to buy this market on weakness as long as we don't reaccept or have any meaningful participation below the base of the late spike. That might, that could spike a value area special situation play, which I'm not even thinking about here just yet. We're opening higher. We're opening with a gap. We're showing acceptance of higher pricing. I'm looking for this market to give me an opportunity for a long on weakness. Even if the opening range is the low of the session and it's cheap enough, that's something I would consider taking. What about crude oil here? We've got, so looking at it this morning, we were kind of holding here as at the high of weekly kickoff. Today would have been the third day testing it. Obviously, we've opened and we've driven above it. June expiration is Monday. We are trading the July contract. Please make sure. Open interest begins kind of clearing a little bit. So there's, a couple of tens of thousands of contracts still in the June contract, but we lost 24,000 in June. Overall, in all the other contract months, we added 9,000. So that's overall. So we added 33,000 overall in the current and future contract months, losing 24,000 in June because it's expiring. It's going to expire and that'll be gone. So it looks to me like we've added some open interest. It was, it wasn't a very good up day, right? It was up against here, but the market is holding a trend line 1, 2, maybe 3 points of contact coming up soon here. So that's been, why are you doing this to me? So there is that kind of up move, higher lows, even lower highs. We've had 2 points of contact here. We're now holding above that trend line. Coiling activity, we kind of use range-bound rules. We fade the extremes, but on acceptance outside of it, we go with it. So I don't know. It's going to be an interesting trading day in crude oil. I have not been very active trading crude lately. Weekly kickoff high I'm viewing as sort of a pivotal level today. I'm going to make this big so we can all see it. 72.90 is weekly kickoff high. So that's going to be somewhat pivotal for me trading crude oil today. Day before yesterday, we looked above it. We closed right at it. Yesterday, we pulled off a little bit, added some open interest, and that additional open interest to me looks like it was new shorts. If we've got shorts that are being squeezed up here, that may give us more time to show acceptance above weekly kickoff high. Yesterday, we opened in range and in value. We suggested being patient and looking for opportunities as the day goes on because repair was likely. Well, we opened, we rallied a little bit. We couldn't quite get to the point of control in this distribution, but we did trade down to and check this lower distribution. So I'm calling this repair finished. Opened with a gap, looked higher. Now we're coming back a little bit. Might give us an opportunity here near weekly kickoff high, which allows us the opportunity to limit risk. Once we got up here, night before last, we traded above it and rejected. Last night we traded up to it, rejected. Now we're above it. We come back to it. What sometimes was resistance can become support. And I like this because it allows me to limit risk. Dan Trader, the late spike, how much time do you give it to have acceptance? Very subjective. When we have a late spike and we open above the late spike, my hypothesis is we're accepting higher pricing just because we opened up there. It doesn't mean I can just buy it. Sometimes you'll get a pullback, maybe even to the base of the late spike. So, there's never a defined line or a definite rule where I'm going to get into it. But just because it's accepting higher pricing doesn't mean I can just close my eyes and buy. Sometimes it does, right? So, all right. Here's the TPO chart for crude oil. I don't know. Did we put the opening range at the high of the day here? And we did. So the opening range is the high of the day in crude oil. Opening with a gap, closing back into the gap, closing the gap. Point of control. We didn't test it yesterday. Maybe we can test it this morning. Actually, we didn't close the gap. Here's the gap. So we're driving to close the gap. Point of control is a visual that the market is likely to revisit sometime soon. So if we don't close the gap or we close the gap and bounce, this might be another opportunity for us down here to close the gap. So we got 72.90 weekly kickoff level, which is this volume point of control. Below that, the gap close. And below that, a value area special situation play. But I'm still not concerned about that here just yet. Let's take a look at the NASDAQ. So yesterday we did too. We broke out above the weekly kickoff high with good volume. You can see it down here. Adding open interest 3,500, which is actually proportionate to the 36,000 addition to open interest in the S&Ps. It's the 3,500 is about 10% of that, and the open interest in the NASDAQ is approximately 10% of the S&Ps. Noticing that this morning, I said, very kind of proportionate, right? Well, the NASDAQ we've seen has been moving higher over time. It has also achieved an A grade auction to the upside. Volume and open interest, with those increases, the price is more likely to go in that direction. Many new longs and old longs in profit. Again, this whole move has been anticipatory. There's a word for me, anticipatory. I don't even know it's a real word, but it seems to work. This is all in the speculation that we're going to come to some agreement for the debt ceiling. It feels fragile, but I'm going to be trading what I see, and trying to believe what I see. The TP, the 30-minute chart here, we've got the market a little less likely to open with a gap. Where's my 13,984? 13,984. There we go. There is settlement. So again, we do have the late spike. We don't really have much as far as overnight inventory is concerned. We're bordering on opening with a gap, but we're still, as long as we open above the base of the late spike, we're going to be doing okay. 13,857. 13,857 is the base of that late spike. Here it is on the TPO chart. Excess low. Pow. This market just took off. And a spike high. Opening with a gap, what's that tell us? Acceptance of higher pricing. Here's gold. Gold. Our downside auction has really actually been performing poorly. This is the third straight day of losing at least 10,000 in open interest as this market continues to try and push lower. Yesterday, day before, we lost 14,000, we lost 22,000, we lost 10,000. Volume hasn't been anything to write home about. This isn't new shorts. This isn't people barreling in looking for this market to go lower. These are long liquidators. And long liquidators do take selling power out of the market. You've got the 100 session moving average right down here at 1950. It's an interesting area there. We're inside extended trading hour range here so far. I'm not impressed by this downside auction. It doesn't mean something can't change and bring in new business to the downside. But with the dollar kind of showing some strength, it's not surprising. What about the 30-minute chart? We filled this old gap down here yesterday. I'm finding that very interesting as a potential kind of support level, right? We filled this gap. Overnight inventory has been kind of long, not tremendous. We're back in range and value. Does this look like an excess low on the daily chart? Not necessarily. I mean, here's an excess. Well, I guess the market doesn't really bring in huge excess lows. Indecision here. This looks like a pretty decent low. What about the TPO chart? B shape. Long liquidation. That's what we were expecting. That's what, and it's actually supported by the loss in open interest. So we've opened in range and value. Try and stay patient. This is a normal variation, extreme day. Points of control are very low. But it's not like we're too short. We've taken out a whole bunch of longs. Interesting market today. Interesting market. All right, let's get to the euro. Euro trading right to weekly kickoff low. Downside auction grade is a B plus. It's been adding open interest, not tremendously. Volume has been maintaining by and large. Support barrier found at weekly kickoff low. Longer time frame decision time. We're kind of an inside day. Actually, I think we did extend below yesterday's regular trading hours, but we're opening inside the regular trading hour range from yesterday. Take a look. Overnight inventory a little bit long. We've got an old gap down below here. I'm not sure if that's necessarily in the right place. It's so old. But we've got all kinds of weakness in structure above this market. So, opening in range, above value. If we reaccept in value, then maybe we look lower. If we find support in value, there's plenty of visuals up above to look at. Here we go. Here's all those visuals. We got a gap here. We got a naked volume point of control right through the gap. We've got points of control a go-go above. There's lots of visuals above, not so much below. If we're getting a little too short here, look at this. Normal variation, extreme day. Ten-year. I'm going to try and get done with this before the equities open so we can see what happens. So one time framing lower continues. We're still adding oodles, and yes, that's an industry term of open interest. One time frame, but I'm kind of giving this a kind of a B or a B minus. Open interest has been coming into the short side, but it hasn't really been bringing in all that much volume, which is a little bit concerning. Take a look at the 30-minute chart here. Overnight inventory was short and seeing some continuation to the downside here. Your rates must be continuing to push higher. TPO chart from yesterday, long liquidation, but not supported by open interest. We added 54,000 estimated open interest yesterday alone, and that is indicative of new selling coming in, and they're getting paid today. I wonder if we're going to see any short covering or profit taking rally at some point today. I hate to put that into the wind, but boy, oh boy, our natural gas sure made a liar out of me yesterday. I was kind of sitting on my haunches just looking at it before, but when the numbers came out, the anticipated increase in storage was smaller than expected, and so this kind of created a fundamental move for us to the upside here, and a little bit of a market state break change, right? Here's the 30-minute chart. Pow! Right through weekly kickoff high, taking out this naked point of control, opening now with a gap, not closing the gap. It appears that the opening range is the low of the regular trading hour session. Not going to be looking to step in front of this without some sort of structure. And here's the TPO chart. So double distribution trend day, low excess, low. Haven't seen very much excess on the lows, but this single line of TPOs is excess below price now. Okay? All right. Let's take our deep breath. I want to be available to see what the equity opens look like. So stay humble, grateful, creative, and centered in your trading today. Blessings to you all. Have a great weekend. I'm looking forward to making a little dough and calling it an early day today as far as trading is concerned. I got plenty of other things to do. So we'll see you Monday morning, 7:45, same bad time, same bad channel. Stay tuned to As the Market Turns. We'll see what happens at the end of the day today. Have a great weekend. Be kind to yourself, be kind to others. Say a prayer for peace, please. We all need lots of prayers. Blessings to you all, and I will see you Monday morning.